we are down 1.7% for the day. Bitcoin is already down 1.96%. Some of the cryptos are already down way lower than that. But yeah, there are some exceptions. Some are actually holding and moving up, but the majority are actually going down. So if you actually look from the government side of it, it's, kind of, we can say the hypocrisy is at the next level. When they needed money, great. Crypto is good, great, blah, blah, blah. But now, no, not from our currency. We don't want to devalue our currency because it's already going down, right? If you are looking at dollar right now, this is what's happening with it. Dollar is kind of crushing all the other currencies. You can go look at different type of currencies, but dollar to yen, this shows like that's breaking last 20 years high, right? We were at this level back in 2002, and right now you're going back to those levels. Dollar is strengthening. So if you go back to dollar charts and you're looking against different assets, you're like, okay, that's not good. This is against euro to dollar. So this chart going down means euro is going down against dollar. So here the basis currency is euro. Fine. So in Forex, if you are looking at this, okay, that's another 13% downside for the euro. I'm not showing this for trade. I'm showing to highlight that dollar is strengthening. This is against British pound. So if pound is to drop, it's going to drop towards the support. That's again increasing volume on the seller's side. Dollar is strengthening. It's now super strong. And on the other side of this, you go look at the market, stock market, it's breaking through. And look at that candle. That's like a giant red candle going through. That's a bearish candle pushing you to the downside there. So this happening in the stock market as a whole, money coming out of it, and the possibilities are it's still going to continue that downside. Now this is on a daily chart. So if you are actually zooming out, say weekly, monthly, and looking at this, that kind of gives you a red flag, right? You're like, okay, fine, I really think there is a huge possibility that this is like around the top. There is a huge possibility for that. And if that happens to be true, your downside is going to be somewhere close to this range. So you have further downside to drop. So from the current price, if you take that one, another 10%, 15%. Now that won't sound much for those who are already in crypto, because we drop that on a normal regular basis, so we don't actually care. Now, when you drop to that support, you are looking for the trend line. Now this trend line is all the way from 2009, and if that's the case, you have a long way to drop again. So you're going to drop to this level. That's going to be 27% from here. And if you put that into perspective, that's like 35% from the top. So that's not 50-60% correction, which you actually get. Because historically, we have seen worse than this, right? So we are going through that phase. Now, I have different charts which I've actually prepared here to actually discuss through. You need to see what's happening in and around the world and compare it with the history. Because when you look at this, and zoom in on particular events, what happened back in this time, that gives you that clarity of what's happening right now with the interest rates, with the housing price. You look at all these major indicators and you're like, that's actually crazy, right? If you are looking at this and you're saying, okay, I really don't understand what's happening, it's an easy stuff. You go look at different items and you're like, say for example, I was kind of tweeting this one out, and now you need to understand when it comes from a bank, that's really important. See, this one really interesting. A bank coming out, National Bank of Canada, okay, coming out and saying this: higher interest rates and inflation may totally wipe out the extra savings that consumers built up during the pandemic, and that too by 2023. So you are already into May. Now, this is late April, but just 10 days. You're going into May. So you don't have years for this. It's going to happen this year. That means the inflation is going to get much worse. And if you are in assets, that's good for you, because the vast majority are not. But when you are in an asset class which is going to do all these volatile movement, you need to understand, you need to have the appetite to digest this. Because right now, if you are breaking through this, you're going to come lower. Now, what is that 15% drop? You're just measuring this and you're like, okay, that's 20%. Usually 70 to 80% is the measured move. So you put that and you get these. Okay, you're going most likely 36,500 and then to 33. So what does that actually mean for the overall crypto market? Because if you zoom out, that's like, okay, I even see 29, right? Fine. That's how it is. You are taking this, stepping back out and looking what's happening and what is going to happen. Because if you are looking at the RSI, it's there and there is a probability that it's going to break to the downside, and you have multiple supports which you have to wait and see whether we are going to hold that line or not. Because when you go on to XRP, you have different scenario here too. Now, yes, you zoom in and you see we are range bound. And here in the RSI, you're breaking to the downside. So we need to actually go look at what the pattern suggesting. And if the pattern is repeating itself, that means we may have a buying opportunity, we may drop. So those who were saying was a bad idea to take out XRP when we actually did that, not entirely, a little bit of it, to make passive income source to put into other assets. Now, other assets, they are slow, they are down. But the passive income sources, they are still generating that ROI on a regular basis. So you get more purchasing power. So that's investing. Now you are actually trying to have that asset. You know what asset it is. You know what the fundamentals are. But when the price comes down, if you don't have more liquidity, you can't buy more even if you want to. To solve this scenario, we are looking at different items, right? Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now, I know we've been talking about a lot of these stuff from a long time. And now when inflation is reaching that high, it all really makes sense of what we were talking through then, right? So the fundamentals still stand unless that project is going bankrupt, unless that project is going down, it's still valid. Just the price is volatile. So if you are in this market saying, okay, I'm here for 3 months, I'm here for 6 months, that usually never end up well unless you have a long time horizon. It's going to hurt you. Now, when we drop like this, keep this in mind. When we drop like this, you just have to see where the trend is going. Are you actually going to the upside? Are you going to the downside? Because when people actually take their mind into that direction, saying, okay, we are dropping. Yeah, I agree. But we are still inside this range of volatility. That's one way to look at this. It's like, okay, you just go look at what was our bottom back then and where are you right now. So yeah, even to retest that level, you still can come back down, but that's not pushing you to a new low. You are still maintaining those levels. So that's a different story. So when you're actually looking at this volatility, you are still inside this range, consolidating after this move from that 0.17 all the way up to $2. Now, usually market does that. Just the time taken to do that is really hard to predict for anyone. So when you actually get repeated patterns, that kind of helps you. At least we are trying to use that for our advantage. So you actually had this pattern, you broke to the downside, you retested and went back down. Now, you're making similar patterns. So if you are breaking this one, yeah, you may have a retest, but most likely you're going to come back down. So taking that into the live chart, it feels like, okay, you're going to come back to 0.5, 0.6, that range, and that's volatile market. Now the question can be, okay, my average is 0.4, my average is 0.5 or lower. Then, unless you really want to push your average up and buy more unit, you're not even considered like, that kind of guy who's going to trade short term, right? You're a long term guy with a long term perspective. So in here, you really don't have much to do unless you're trading other assets, using their volatility to find opportunities, make some bucks here and there to make a little bit extra purchasing power and to diversify your portfolio a bit. Now you have to take on this. You go to Ray Dalio, it's like diversify. But you go to Warren Buffett and it's like diversification completely means you really don't understand what you are completely doing. Now, that's not a bad thing, but it's not that good thing as an investor. If you really understand what you are doing here, then diversifying too much doesn't make any sense. So if you are picking like 5, 10, 15 assets in a market where you have 15,000, that's okay. But going for 30, 40, 50 assets would be really hard. 5 to 10 assets would be easy to handle and you will be top loaded. So one of the approach there is better like that for this asset too. Now, there's a weekly chart. Go on to a monthly chart, delete all of this, forget whatever I've told, and look at this and say, what do you actually feel? Now, yes, there's a monthly and it needs long-term perspective and that nerves of steel to go through this. But for me, now, okay, you may have a different perspective, but if I, as a human being, was looking at this, I would say like, okay, there is a high possibility that this is right now forming a pattern like this, which kind of happens to be like, the falling wedge, cup and handle, both of them are together. Now, usually it can be even the parallel lines, but right now it actually feels like it's a falling wedge being prepared here if we are dropping, and that drop would take us to 0.53, even though it's bullish on the macro scenario where you're measuring your measured move, which would be somewhat like this, 15x after the break. Now you'll have two targets. One, if it's breaking from here, you get two targets. So the conservative one would be taking you somewhere towards $12, whereas the optimum one, you would actually most likely take it from the break of the neckline here. So you are taking that 14 and you are somewhere close to $28. So that's a big range actually, $12 to $28. If you happen to end up even somewhere in between that, that's a massive gain from where we are. But to maximize that, say for example 0.7 to $10 is great. But if you drop and go to 0.5 and you can buy it from 0.5, then 0.5 to 10 is marvelous, right? So that is a perspective which you can use. But this market, it's super volatile and it's going to take you to that level where it's like, okay, what should I do? What should I do? Okay, the market is dropping. What should I do? So if you're here for short term, that's going to be really hard to manage your money inside this, because you see your portfolio going up to 1 million, 10 million, wherever, and then dropping 30, 40,000. That's okay. But when it drops 30-40%, you're like, I should have done this. I should have done this, right? To avoid these concerns, that's why you're actually trying to look at the macro picture. Okay, in this one, you may literally come back down, and even with that kind of a correction, when you step back on a macro, you're like this. Fine. Now, what we have to understand is say, okay, I agree that when you go zoom in on a daily chart, for Bitcoin, you actually see price moving inside parallel lines. And as we've already discussed from a long time, whenever you see price going in these parallel lines, it's usually a correction. So it's not the trend. So for daily, your trend is this, your impulse is to the downside, you're correcting here, and most likely you're going to come back lower. So there is a possibility. Now, keep that the same and slowly step back out. Now, you're like, okay, the impulse is not up, the impulse is not down, I don't get much idea. Fine, step back. Here, when you're stepping back into this chart, keep the same pattern in mind. You are actually getting another movement of price within parallel lines, but this time, your impulse is to the upside. So when you actually break this one to the upside, you're going to go higher. So 110, 120, 125, we don't know. But even this short-term fluctuation which we talked about, going down, come back down to the same support line. Now, I know this is painful. I know this is hard for many to digest. But understand, you're going back to this level and your moving average, that's 100-day moving average, which we have in this chart right now. So if you actually take that to 200, it actually goes lower. So if you are coming here to 28, 29, 33. That's still inside the macro trend. So you turning bearish is fine for short term, because if you're a bear for a month, that's a different story. If you're a bull, it should be based on the macro. Or you are a trader, you're trading short term charts. So for that, you would be most likely going on to a 4-hour chart. And let's see what 4-hour chart in crypto of Bitcoin shows you. This is volatile. You broke the moving average to the downside. You retested, you failed. Now, what's your first support there? This is your first level of support. So if it's breaking to the downside, you are going down. So what are you looking after this? Your second level of support comes here, close to 37. Third one comes somewhere here, 35. And the final one comes down. So if you are a bear, you're going to trade to the downside like this. But understand, this is crypto. If you are leveraged to the downside, you will be wiped out, because someone in between comes and push the price up, you are kicked out. You really don't want to do that, in my opinion. So when you are in crypto and you are like, okay, I'm mostly in altcoins, you are also looking at the altcoin market as a whole, looking like, okay, what is this market showing me? Okay, you are inside this pattern, which kind of gets extended, right? So if you are looking for an end to this pattern, you literally have the entire year for the consolidation. But yeah, keep this in mind. You naturally don't go till the end of that pattern to break up. You usually break higher or lower by 70 to 80%. And if you're looking at this as an ascending triangle where your impulse is to the upside, now that's not that hard. You just go type that in Google, and Google actually shows you this. You just go in. Now, yeah, you need to understand the patterns, but once you have the pattern, you then look what's happening inside that. It most likely happens like this. So you kind of get the trend and you kind of get the pattern. But while you're consolidating inside that pattern, buying close to the support and waiting for it to go to the resistance if you are taking profit and trading. If not, buying close to the support and accumulating is one of the best thing to do. Now, if you look at the support, resistance, different zones, you are like, okay, we had this accumulation range, you broke higher, you consolidated, you went up. That's first leg of this rally. Now you're consolidating and you're going for the next one. So as you zoom out and put this number, now you need to understand we had a long wick before, and that long wick is like 630x or something. Let me put it from the current price to the top. Yeah, like 620, 630x. Now, we are like, okay, that's just a glitch. Neglected. Fine, that's just a glitch. Neglected. But when you try to connect these resistance, you kind of end up somewhere close and you're like, is that a glitch? Maybe, but if the resistance is going to be retested again, which the history shows it would most likely, at some point in time in the future, you're going to reach that level. Now, you look at the market cap and you say, wow, how crazy are you? Can you even think? How can you even think? Like we are going towards 30, 40, 50 trillion dollars in crypto. That's the wrong thought process. I know a lot of big YouTubers are giving you that perspective saying, market cap is now going to reach that area. Where do you think the money is going to come? Come on, guys, be serious. You look at the market cap, it's the sum, or it's multiplied with your entire liquidity and the price. So you go look at what's the circulating supply and multiply the price, and that's what the market cap is. Imagine there is 100 billion XRP and they are multiplying. Now, it's different, but when you come on to all of this, you understand one thing. Say you consider $50 billion in the market. If you are invested in crypto, most of that is in ledger. If you are a long-term guy, say for me, I have XRP and it's in the ledger. Majority of it, right? It's not in the circulating supply. So you really don't need, now if you understand the math here, it's easy. You really don't need $30 trillion to push the market cap to $30 trillion. You need $5 to $6 trillion, maybe $4 to $6 trillion to actually push the price up to $30 trillion in market cap, because the supply is not there. What they are showing you outside, it's not there. The circulating supply is much lower than that. So the sum of money you need to push the market up is way lower. And if you're saying, okay, $3 to $5 trillion is not going to come to crypto anyway, you really have a hard time understanding what's happening around you. Look at the stock market. The money is going to go out of the stock market. Where do you think it's going to go? Yes, gold is a huge option. It's actually making a bullish pattern. Money is going to go into that direction. When dollar gets strong, inflation is high, a lot of other countries like this are going to get hit hard. And they're going to go move into an asset class where the price is moving up, not down. Right now, the real estate market is going up. Yeah, you look at that, you understand that. But whenever that happens in the history, if we learn something from the history, we happen to drop. Now, if you go look at the history, you understand we go up, we saturate, they go down, and at saturation at the bottom, then go back up. Now, I'm just pointing that out to show the money is not going to go directly into the real estate market when the interest rates are going up and the price is going down. Most likely, you're going to get a share of that coming into crypto. Gold and silver will be one of the biggest options for them, but crypto will also be considered. Right now, being in the market inside crypto with kind of 20,000 different assets, you're like, which one should I invest? A lot of guys are going to go for the marketing stuff. They're going to go all around. But looking at the fundamentals, if you're putting your money in, you understand this. Okay, we are going to have a ton of money coming back into this market. Because if you are falling for this kind of hypocrisy, it's going to be hard to actually digest the macro. Because even them were doing the same stuff. Like they were doing this. We all knew that. People were sending the help all over the world. And right now they are like, no. You can buy crypto, that's good, but buy it from other currency, not using ours. We don't want to, use our currency to do this. So you kind of get that pattern. If Altcoin is to do 600x, that's crazy number, right? Not all coins are going to do that. Believe me, not all coins are going to do that. It would still be like there are some coins which does 6x, some 60, some 600, some 6,000. But even if you catch the average pattern movement in this market, now we really don't know how long it's going to take to reach there. Whether it's wave 2, whether it's wave 3 or next cycle, we don't know. But the resistance is open till that area and the market is going to go till there. That's your macro direction. So when you actually put on your trend line for the macro, you are like, okay, the macro scenario is still trending to the upside. There is no doubt in any manner for me. I'm like, okay, this shows there is a possibility that you can go to the upside. Now, yeah, your downside is this much and your upside is this much. If you're an investor, you are looking for what my downside is and what the potential upside is, right? So you're comparing between that. See, if you put $1,000, you can lose $1,000. Fine. But you can make 3,000, you can make 5,000, you can make 10,000. That's a different story, right? So you are looking for your downside versus your upside, and you are like, okay, I think the odds for this asset class to move to the upside is higher, but given that you have time, if you don't, it's going to be really hard. Say in between, we are going to go down to the support and then bounce. Whew. If you don't have time and you came in at the top, that's very bad. You'll have to take your money out at the bottom, which is going to be really bad unless you have more time. So to add this up into any assets where you are looking at the macro scenario, that's super bullish. Whether you are in only for wave 2 or for wave 3 or for the entire market cycle of this asset class, you're going to make a ton of money. But the difference is you'll need that level of patience. Guys, if you are receiving value for your time, please do hit that like and subscribe button. And yes, the market is volatile. And if you are trading in a lot of different assets, trying to get positioned in a lot of different assets, you can look at the Patreon. The link is given in the description below. I'll meet you guys on the next video. Bye for now.